Joining me now for a broader look at this afternoon's market performance is Lwazi Matakane from Nedbank Private Wealth. Lwazi, thanks so much for your time this afternoon. So lots happening on the local front, and I guess let's just start off with that, with everything that's happening, the company news. Let's start off with Old Mutual. Earnings coming in higher, supported by growth from its short-term insurance and wealth management units. Let's just go through those numbers and let me know what you've made of the earnings report.
Thank you, and thank you for your time, and good evening, good afternoon to your viewers. Just to look at those numbers from Old Mutual, I mean, if we have, the numbers look solid themselves. However, there's a lot of embedded negatives within those numbers, and it shows a challenge. It shows that Old Mutual is operating in, call it a challenging environment for themselves, and the stock market actually isn't enthused by the results. I think the stock is down about 1%. And if we had to talk about those negatives, if you look at life APE sales, which tracks the volume of new sales, or life sales in particular, that declined 5%. Margin on new business is tight, it's around 2.5%, which was the midpoint of the target range. And look, we did see a good number in the adjusted HEPS, as you previously alluded to, increasing about 17% year on year, which was in the mid-range, their guidance range. And they did declare a dividend which grew around about 6%. But there are still problems within the operations. They are impairing the operations in China. The bank losses, you've alluded to in your business brief. Those are, higher than peers, and it's looking like it's taking longer for them to actually bring the bank into break even if we're looking at 2028. And again, those costs are much higher than peers who've actually ventured into the banking space within South Africa. So the only positive I could really look at in there, apart from some of the numbers, was that they are actually taking the decision to exit unprofitable African markets.
Yes.
And I think that's a positive on their front from a management perspective.
So on the surface, the numbers look good, but when you dig deeper, we are seeing some problems when it comes to some of the operations. And I just wanted us to dig deeper into the banking operations, which they say will break even by 2028. I see that Old Mutual is also targeting the affluent customer. That puts it against the likes of an Investec and, let's say, a Discovery. Really a tough market to crack, Lwazi.
Look, it will be very difficult. I mean, affluent are well serviced. Currently, if you're looking at the competitors, where it's Discovery, it's Investec, and most of the big four banks, which have private wealth divisions that particularly target high net worth individuals. So it will be very interesting to see if they can actually pull it off.
Yeah.
Whereas I think what their initial target was the lower end, part of the Mass Foundation cluster. So we'll see if they can actually pull that with respect to the product offering. But it's going to be very difficult to pull those clients away from already established institutions.
Let's look at African Rainbow Capital. They'll be ditching the JSE. That's as it struggled with the discount to net asset value. The group further saying the delisting will unlock value for shareholders. I mean, a delisting is never good news, but what have you made of this announcement and its plans to move its headquarters to Mauritius?
Look, we're looking at the JSE. We know there's been companies delisting for a couple of decades now. I mean, we've gone down from 400 companies to the below 300 that are listed now. With respect to African Rainbow Capital, not one we really look at. But if you had to just look at the numbers and look at the portfolio, the portfolio is largely concentrated around 5 investment companies or portfolio companies that make about 2/3 of the fund itself. Particularly the most significant would be your Time Bank. You've mentioned the tie-up for the third-party asset management tie-up with Sanlam and Alex Forbes and Rain, which looks like it's steaming ahead in terms of valuations. I currently saw the number around about, it's valued at least slightly more than Telkom itself, which is a big valuation, which puts their stake up at 5.7 billion rand. So that the delisting to go to Mauritius, obviously Mauritius is a favorable jurisdiction with respect to financial services. Their regulatory framework has been attracting companies for a while now, and we know that we also need to start being competitive as a country with respect to how we regulate, capital markets and space where we can attract foreign investors or even local investors, keep them in South Africa and keep it attractive to have headquarters inside South Africa. So I think it's a natural move towards a favorable jurisdiction where they can do more out from that jurisdiction with respect to Africa.
And you mentioned, that delisting crisis that the JSE has been dealing with. And I know last year they made quite a few moves to try and attract even further listings. But I guess in a low growth environment, that's also just difficult to do. Let's move over to Super Group. That group also not doing really well. UK dealerships and the supply chain Africa business weighing on earnings. The group also being affected by disruptions in Mozambique. The last time I checked, that share price down over 3% or close to 3%. What have you made of those numbers, Lwazi?
Yeah, like you've mentioned, group revenue is down. Headline earnings are down 24% based on weak performance outside the UK and Southern Africa. Obviously, Mozambique was an issue. They had elections there, and we saw a lot of rioting for a couple of weeks and no activity actually taking place within the country as a result of the volatile situation taking place there. Look, my inclination is that logistics business do well in a growing environment. And if you look at the jurisdictions that they operate in, the UK, growth was anemic last year for the full year of 2024. I think it was 1%. If you're looking at South Africa, which is, their domicile, home market, I think we grew around 0.2% and nothing to write home about. So it becomes very difficult for a logistics company where it requires real economic activity to actually push operations, where there's a really tepid growth in that respect. But the market kind of liked the guidance of a better second half with respect to what they see within Africa operations. We know copper right now is a metal that's in demand. It's got multiple use cases. It's used in electrification. It's used in infrastructure projects. So the movement of goods within the commodity space will actually alleviate or give demand to logistics infrastructure. So that would be a good thing for them. And also just rationalizing and having cost efficiencies within the UK operations will also do good for them to actually keep costs low. That's basically what the sum of what the market thinks around Super Group.
And you're right around that outlook. My mistake, I did say that the share was down. It's actually up 5% this afternoon.
4%, yeah.
Yes, so let's just hit pause on the conversation. Before we get to your pick, let's reflect on some counters that have found favor with your industry peers.
Yes, so Remgro is that classic play on SA Inc. because it's got a little bit of everything in there, but it's trading at a 48% discount to its net asset value. Now, if you look at some of the companies in there where we've seen results so far, Outsurance, excellent results. FirstRand, excellent results. Discovery, fantastic results. RCL and Rainbow Chickens performing very well. We don't have line of sight on Mediclinic, but I think that they would have just bumbled along. And then you've got Heineken saying that the South African business has really showed a turnaround over the last few months. So I think Heineken SA can stem some of the losses that we've seen over the last few years. So I think decent portfolio momentum for Remgro right now. Perhaps the question mark still around CIVH and the Vodacom tie-up. Hopefully we get good news on that soon. But it shouldn't be trading at a 48% discount to its net asset value. There are options there.
Yeah, I suppose Chantal and I are both in the discount to NAV play. I think what I like about Ethos is firstly, Chantal was rightly talking about fintech and the opportunity there. Ethos's biggest holding, representing about 50% of NAV, is a company called Optasia, which provides a lot of the technology for the likes of MTN and Vodacom, and around 500 million underlying users. But Simon, the board has resolved to basically liquidate as sensibly as possible the portfolio. So if you've got a R7.85 NAV, you're trading at R4.64, with, I believe, quite a bit of mojo in that NAV. I think there's a reasonable chance that can give you 10 or 15% NAV growth over the next while. And pretty much over the next 3 years, let's call it, they're going to return that to shareholders, either through specials or through buybacks or through distribution. So I believe there's a 40% discount to, let's call it, December's NAV. I think that NAV is going to strengthen, to June and to June of next year. So for me, you're buying a fairly compelling underlying portfolio at a discount with high visibility on the fact that portfolio will be rationalized, if that makes sense. So I think I'm comfortable that the strategy to return capital will be executed, and that you've really just got like a 2 or 3 year horizon to take 4.64 to 7.85 plus, probably closer to 9 rand in terms of when all the dust is settled. So yeah, discount, but not just the discount, some exciting assets.
So EPE Capital Partners and Remgro also out with a trading update today. They've forecasting a jump in profits as, you know, the businesses across their portfolio performs well. What's your reading on those counters, Lwazi?
Yeah, I think Remgro is one we like. We hold for our clients in their portfolios. We also hold it in our own model portfolios as Nedbank Private Wealth. One of the things we like about Remgro is obviously it's got an interesting number of portfolio companies underneath there, and it's got listed assets that, you know, have done well in the past 12 months. If you look at Outsurance, Discovery, First Rand, they've done quite considerably well over the last 12 months, and they contribute meaningfully towards net asset value of the company. What we, you know, hoping to see with the results coming out of the 25th is how, well, if the discount to NAV has actually widened, and by how much. So I think that's the problem with all these holding companies is that you're always buying underlying assets at a discount, and you're underpaying, which is great, and you have to wait for that discount to actually erode. But do you want to be in the asset itself, or do you want to hold the holdco? So yeah, it is an issue, but we do like it. We do like the underlying assets themselves. Mediclinic, like your analyst said in the segment, not really line of sight, but we do think it's a good business. It's got a good South African business. It might have tailwinds around Switzerland and the regulation around there, but for the most part, again, the assets underlying Remgro, we do like. There is an optionality around that tie up with Vodacom, with CIB, and what that will do to the portfolio itself. So it's one we actually, you know, put in our client portfolios because we do like it. EPE, don't really have a look at EPE.
Okay.
Again, that discount to NAV for a holdco that you if you don't really have line of sight of the assets, then it becomes difficult to actually monitor, and you're reliant on those directors' evaluations, which, you know, can be out of whack if they're not entirely listed.
So Lwazi, what are you liking? What's your stock pick?
Yeah, look, I do like call it high-end fashion retail, the luxury goods market. I think for the South African investor, Richmond is a good stock to hold in their portfolio. You know, you're getting hard currency earnings. You're getting a company that holds luxury brands that are in demand. We know if you look at the last results that came out in Jan, there's a speculation, obviously, or there's a sense that luxury goods will not be in favor for long because of what's happening in the world and the economy and the changes thereof. But the thing is, the upper LSM has a very less elastic demand to goods and services, and they will not, you know, demand for what they appreciate will not fall off a cliff as opposed to lower LSM consumers. So I like the story around the fact that they have got a jewelry exposure, which, you know, high-end consumers like, particularly in Asian markets. In India, in times of need, they buy high-end jewelry as a store of wealth. So the exposure there to jewelry, to high-end designers is one that I do like, and obviously the hard currency aspect of it for a South African portfolio. So I would take Richmond and put it in a client's portfolio.
So Richmond, one to look out for. Lwazi, thanks so much for your time and just taking us through trade at midday. That was Lwazi Matakane from Nedbank Private Wealth.